some would call history in the most scary. Don't say that.
We have never been down 1,000 points ever, not even intraday on the NASDAQ.
That's not true. May 2024 was the last time this has happened before, but we can pretend it hasn't happened before. It's still bad.
Is that true?
That is true.
No, it's not.
Down 6% right from the get-go. This is heavy big tech. Here we go. Look at them go down. Microsoft is down $20. That's 5%. Alphabet, 5%. Meta, 6%. Amazon, 6%. Apple, 9% down. Let's pull out Apple. This is interesting.
It is interesting. Even when I was working with Apple, I said them becoming a part of the NASDAQ was always a risk. The reason why is simple, folks. You're going to see it is defense stocks are soaring and big tech is crashing. You're going to see aluminum. You're going to see plastics. You're going to see all types of reinforced glass and circuitry be on a high demand for the military. This obviously impacts Microsoft, it impacts Apple, but it also impacts the social media companies as you'll see those prices drive down because less phones, less computers, less iPads, and everything else means less engagement on these platforms. We'll have more, including why it always seems you lose your money when it comes to the U.S. government, right after this.
Do you want the truth? Are you tired of being so confused? You feel like you're more f***ed up than the lies on the evening news? Well, just step right in. We can talk about it all as friends.
This is Matthew Spear from the DUM Show. Welcome. And that is Still Point, STIILPOINT, the Donut for Me band. We love them. Can't get enough of Still Point. Thanks for watching the Donut and Friend Me show. What are we going to be talking about? Well, obviously, why are defense stocks soaring, and why is your 401k and your retirement hurting? I think we can all say. And as I was making the rounds this morning, I came across an intriguing meme from our good friends at Wimkin. And the image depicted a stark contrast while major indices like the Dow Jones and cryptocurrencies such as Bitcoin and Ethereum were plummeting. But Lockheed Martin stock was performing exceptionally well. The visual comparison sparked a thought. Is there a reoccurring pattern between global conflict and the prosperity of weapons contractors? It's a known fact that such patterns exist, but what often precedes these developments is the unfortunate reality of the average citizen, you and I, losing our retirement savings. Throughout history, we've seen this pattern, and it plays out repeatedly. In the late 1930s, during the lead up to World War II, the global economy was still reeling from the Great Depression. Markets, they were highly volatile, and many individuals saw their investments dwindle. However, defense companies like Boeing and Lockheed Martin, they benefited significantly as demand for military equipment surged. This pattern of defense contractors thriving while the broader market struggled has been a consistent feature in times of conflict. In the late 1960s and early 1970s, during the Vietnam War, we observed a similar trend. U.S. government spending on military supplies and technology increased dramatically, providing a boon to companies like General Dynamics and Raytheon. Meanwhile, the average investor faced substantial market volatility, often resulting in significant losses in personal savings and retirement funds. The early 2000s, following the 9/11 attacks, also mirrored this trend. The war on terror led to a rapid increase in defense spending, with companies like Northrop Grumman and Lockheed Martin once again seeing their stocks rise. The broader market, however, struggled, still recovering from the burst of the dot-com bubble. This divergence between defense stock and the general market has been a consistent indicator of the financial impact of military engagements. The 2008 financial crisis serves as another stark example. While the crisis was primarily triggered by the collapse of the housing market and the failure of financial institutions, the resulting market downturn affected all sectors. However, defense contractors remained relatively insulated, buoyed by continued military engagements in Iraq and Afghanistan. Their stocks either held steady or increased, supported by ongoing government contracts. The COVID-19 pandemic brought another wave of economic disruption. The initial market crash in March 2020 led to a loss of trillions of dollars in global wealth, affecting every sector. Yet, even as many other companies struggled, defense contractors continued to secure significant government contracts, helping them maintain stability once again. While the broader market eventually recovered, the uneven nature of this recovery highlighted the disparity between different sectors, particularly the resilience of defense stocks. Today, we are witnessing similar dynamics. The recent drops in major indices like the Dow Jones, coupled with significant losses in cryptocurrencies such as Bitcoin and Ethereum, have once again highlighted the vulnerability of the broader market. Meanwhile, defense stocks, exemplified by Lockheed and Martin, have been performing well. This trend is not limited to the United States. Japan, facing a recession exacerbated by global supply chain disruptions and decreased consumer spending, has also seen significant market instability. Adding to the current financial unease, the latest U.S. jobs report showed weaker than expected growth. This, along with rising inflation and concerns over potential interest rate hikes, has contributed to a decline in investor confidence. The resulting downturn in the U.S. stock market just yesterday underscores the anxiety pervading financial markets, and this morning isn't any better. For many individuals, particularly those relying on 401ks and retirement savings, these market fluctuations are more than just numbers. They represent potential losses in hard-earned savings. The fear of seeing one's retirement nest egg evaporate due to market downturns is not an abstract concern. It's a reality that many have faced before, especially during the 2008 financial crisis and most recently COVID. So why does this cycle keep repeating itself, where the average citizen loses wealth while defense contractors thrive? The answer lies in the nature of the defense industry. Companies in this sector are heavily reliant on government contracts, which often increase during times of conflict or global instability. This creates a situation where defense stocks are perceived as safe havens during turbulent times, making them attractive to investors looking to shield their portfolios from broader market declines. Investing in defense stocks might seem like a prudent move during such periods, but it also raises ethical questions. Profiting from companies that benefit from conflict and war can be morally troubling, just not for politicians, especially when considering the human cost of these conflicts. As investors, it's important to weigh these ethical considerations against potential financial returns. Don't let history repeat itself. Learn from the past, because as we know, what is past is prologue. The financial patterns we've seen unfold during previous periods of economic instability offer valuable lessons. To navigate these turbulent times and protect your financial future, it's wise to consider alternatives to traditional market investments. One approach is to keep your investments closer to home by supporting local business. Not only does this bolster your community, but it also allows you to have a tangible impact and potentially receive more consistent returns, as local businesses often rely on community support. Additionally, investing in time-tested solutions like gold and silver can provide a stable hedge against market volatility. Precious metals have historically retained value, particularly during times of economic downturn, making them a reliable safeguard against the unpredictability of stock markets. They offer a form of wealth preservation that is independent of the fluctuations seen in other financial assets, providing a sense of security in uncertain times. For those wary of any form of investment, even keeping cash at home, while not the most secure method, can sometimes be a preferable alternative to risking it in an unpredictable market. While this approach carries its own risks, such as theft or inflation, it can still be a better option than losing value in a market downturn. This strategy can act as a short-term measure while seeking more stable investment opportunities. In these uncertain times, safeguarding your wealth with practical and reliable options is crucial. By diversifying your investment portfolio with a mix of local business support, precious metals, and secure cash holdings, you can protect your assets from the vicissitudes of the market. This ensures you don't metaphorically set your hard-earned money on fire in a dumpster, watching it vanish as market conditions fluctuate. Instead, you create a financial safety net that can withstand economic challenges, providing peace of mind and financial stability. Or you can just go ahead and latch onto a politician and find some good insider trading tips That's how they get paid $200,000 and somehow walk away with millions after their term is over. Folks, thanks for watching the Don't Unfriend Me show. Tonight we are on 7 o'clock. The full house. Olivia, myself, Leroy, and Amy will all be here. We can't wait to see you. Please stop on by thedumshow.com. Pick yourself up a hat, a t-shirt, some coffee, whatever you would like, and support the show. Thanks for watching the Don't Unfriend Me show, and we will see you tonight at 7.
Adjusting transmitter output.
This is the Don't Unfriend Me show with your hosts, Matt, Leroy, Amy, and Olivia. Geopolitics, military analysis, and election coverage. Coming to you live on all major social media channels at The DUM Show. Honest, direct, unfiltered. We can agree.
Adjusting transmitter output.
This is the Don't Unfriend Me show with your hosts, Matt, Leroy, Amy, and Olivia. Geopolitics, military analysis, and election coverage. Coming to you live on all major social media channels. Show. Honest, direct, unfiltered. We can agree, we can disagree. Just don't unfriend me.